Hey, welcome to Closing Beat, everybody. Happy Wednesday to you. How you doing out there? You ever notice that all the songs out there, they say the same thing over and over and over again? You a little tired of that? It's kind of like all the other advisors out there. They just say things, the same stuff, over and over and over. There's nothing unique about what they have to offer, except Jazz Wealth. We are unique financial advisors. Right? What? Lower it a little bit more. Okay, a little lower, a little lower. All right. I was excited. You know, I was making a point, too. We're unique. Jazz Wealth. Just like the music. So anyways, hope you have had a good day here so far. All right, so we get these jobless claims numbers come out today. It was really all there was to focus on for the most part, economically anyways. And so we get these jobless claims numbers and the market liked it. What happened? So we end up having 231,000 new people jobless, right? We were expecting 212. So obviously it's 20,000 off roughly. And that's kind of a big miss, right? 1 in 5 misses by that much. And so the market, you would think, would be like, uh-oh, shoot, people don't have jobs. Maybe we ought to be weaker. No, it actually celebrated that. And if you've been following along, remember, we're like the only advisor that can talk about the markets every day. Other advisors just put you in like some random string of ETFs or something like that. But if you've been following along, you know, that's what the Fed wanted. Just a little bit more weakness in the job market. Just a little bit more weakness in how much you get paid at your job. Like if you change jobs, you know, not a big raise, right? Just a little bit more weakness in or uptick in the unemployment percentage there, 3.9 now. That's helpful because it helps lower inflation. What's the problem? Cody being picky today, man. What are you doing? Okay. Hey. Well, no, I look at that. The man wants you to have the best. But it's working in the Fed's favor. Great. Well, that means it's working in the market's favor. That means that rates can not go higher. That means that we can keep things as is and we can project earnings going forward, which is all anybody's trying to do, because remember, the stock market moves based on earnings. So that's what you got going on there. That's why it's good. Now, 1 week does not make a trend. Right? You know that phrase? You know, we've got a lot of phrases these days, but 1 week doesn't make a trend. So just one little week of information. We'll check out next week, see what's going on. But that's kind of the thing there. If you look at the S&P, so we're trending ourselves higher, getting back towards what would be considered a little bit overbought here in the short term. Not really that big of a deal. There's a really simple lesson if you want to see here today. The S&P adds, 27 points. And if you look at the Dow, it added 370 points or so. I'm getting after-hours data now. But remember we talked about that the other day. If the Dow's up 370, then the S&P should be up 37, sorry. There's only up 27. So that means either something's wrong in the S&P or maybe the Dow is standing out a little bit, right? So a little bit different there. And if you really look, I'm going to go over to the slides. Here's kind of a heat map of the S&P. And I use this just to show, well, wait, was all the S&P higher today? No, not really. We had a lot of tech stuff in there. We had a lot of the semiconductors, software, sprinkling in some other red in here. But generally, yes, the S&P was firing on all cylinders. Let's say 3/4 of the cylinders there, right? Not a good thing if you're flying an airplane, but it's what it is. So if that's happening, then we know that something must be different in the Dow. If you look at the Dow, that one stood out here even more. It outperformed. It's not normally like that given the tickers that are inside of each of them. So if you do a little, this is a really simple lesson, but if you do a little deep diving, you've got Goldman Sachs, new 52-week highs hitting there. You got Home Depot, very strong recovery off the 200-day moving average, in my opinion. And then you got Caterpillar, which is a high-price stock that doesn't have to go up much in order to impact the Dow so much. So what ends up happening here is those three stocks account for half of the gains in the Dow, right? So Remember, there's 30 stocks in the Dow, so 10% of the stocks in the Dow accounted for 50% of the day's gains. And that's why you see that divergence there. So it's just something that I point out because I do that every day. I kind of look at the comparison between the two and I go, something's off or everything's good, right? So a real simple way to do that. Moving along, so we go over to the NASDAQ here, somewhat of a quiet day for the NASDAQ. You might take a look inside of what we just shared there with you. Some of those NASDAQ heavy names just not having a great day. Adobe, NVIDIA, Tesla down in here, and Microsoft, of course, not doing anything, right? Alphabet not doing anything. Meta not really doing anything. So if you look over at the NASDAQ, notice that was a bit of a quiet day. That's okay. Bitcoin up 1%. I don't really care. Gold, there you go. A little more action in gold. I don't know that you bite on this yet. Remember, gold goes in fits and starts. I don't know. I'm not good at that. I know, strengths and weaknesses, and one of my weaknesses is not being able to tell when gold's going to wake up and just take off again. But nonetheless, it's important to point that out. If you look at the Russell 2000, across the board, that is your leading index, right? By percentage, but also underlying. If you look at the factors, so small cap growth, small cap value up 1.2, that was the best performing factor of the market, 1% for everything else. So it appears the Russell waking back up again. Let's go over to bonds. Everybody's interested in bonds these days. So we've moved off the bottom end of this trend. We now find ourselves right in the middle of this trend here. So do we continue to get back to levels where maybe rates come down a little bit? I don't know. Today was not one of those days where it would tell you anything of meaning. Although it's not an inside day, you'd kind of say it's an inside range day because it's inside the range of the last couple days. That's a weak and very loose argument there, but you get what I'm saying. If you look over at crude oil, back up almost to $80 a barrel. I think tomorrow's Friday. What's the day? No, it's next week is when almost the middle of the month, when you get a lot of the really, really smart analysts in the oil space will publish their latest things there. So maybe we can go over some of that for you if you like. All right, the S&P. If you're a bullish investor, what's best case from here? Best case from here is consolidation. Like back and forth. Give me some back and forth where I can't make heads or tails of what the market's doing. That allows it to build cause for another rally higher. I don't like the idea of this giving us a pretty much straight up rally there, but that's what everybody's looking for, is that consolidation. Take a break, buddy. It's okay. You did a lot of heavy lifting for 5 straight months. You pulled back a little bit. Let's just take a break. That's kind of where you're at. I do want to point out sector-wise, utilities. Extremely overbought, the most overbought sector in the S&P right now because of this run. New 52-week highs, that's the first time in over a year. I believe you got to go back to November. I probably could do it for you. I believe it's November November 2022 before you have the last time this made a new 52-week high. So that's 400 and some days there. The forward stats, by the way, looked it up, just had a little fun with it. When the utility sector makes a new 52-week high, after not having a new 52-week high in over a year, the forward performance, 3 months, 6 month, tend to be very positive. You got 87% probabilities that it is going to be higher by then. The leaderboard.
Yeah, your leaderboard today, we have Tia, Daryl, Tia, that's Ant in Spanish. We got Ant K, Daryl, Lawrence, Luis, and Mark. That's your top 5 for today. Jazzwell.com/guess it out.
Is that how you spell Tia in Spanish?
No, that's T-I-A.
Okay.
Yeah, phonetically it's Ant, I guess.
I just had an idea while you were talking and I wasn't listening.
Oh, okay.
What if we named the show every day the same title as the CNBC headline?
Oh, interesting. Don't they change that a lot or no?
Nope. Right at the end of the day, right? We go, Dow closes more than 300 points higher, securing 7th winning day. What if we use the exact same words? Would we rank maybe something?
I think that might be a good idea.
Oh, if you guys notice a slight change in the title of the show, well, Dustin just had an idea there.
It's a good idea.
All right. Well, congratulations, those of you in the lead going into tomorrow. Of course, one last day to go. Let's talk about some stocks in the news. All right. And then I'll take your questions. You have any questions? Tapestry. There's a lot going on with them lately. This is Coach Kate Spade, all that good stuff. Big rally here off the bottom. Sales down 1%. Full year sales cut by another 1%, which is probably why this gap down to start the day. They said the American consumer is challenging right now. That's a fancy way of saying they don't want to pay up for our supposed luxury goods, which really are made by the millions and just looks like they're luxury and unique. And so that probably started things off on the downside. I did not catch the conference call, so I can't tell you anything more about that. Hyatt Hotels, occupancy up 0.6%. That's a lot. Remember, this is not Hyatt. This is all their brands inside of it. Revenue per available room, which is kind of like the airlines do. They'll say revenue per available seat mile. These guys say, how much revenue did we make per room? How many rooms do we have, right? Up 1%, room inventory, the availability for them to make revenue off of rooms. Up 5.5%, that's good. Costs were a bit of an issue. If you're going to look for anything weak in there, it's going to be costs. All right, these guys. Yeti, it's a fascinating company. Like, you know, they make the same thing as all the cheap stuff at Walmart, but you're willing to pay a lot more. Besides maybe the cooler, I get it, right? Earnings up 36% more than expected there. Sales up 2%. If you were looking for something weak inside this, it might just be inventories. Their inventories are going up, which just suggests maybe a slower throughput or future slower sales would be an easier way to say that. Fascinating company, man. They get a premium for those things. If you have a company and you're trying to market a product, go study that. Just to learn a little bit from them. I'm not saying, you know, I agree with it, but it's fancy. Airbnb. All right. Airbnb now sticking out. I know a lot of you like this Airbnb. We're really starting to see how little power they have to compete with hotels in pricing metrics here. I'm not saying that they can't compete. Saying when it comes to controlling price, hotels got it down. They just simply adjust the price. Airbnb can't do that as much. They have to coax and push and suggest, right? So we're starting to see that inside of their earnings there. Their guidance forward, going forward, they said the booking value per night down 2%. In other words, people are wanting to be a little more competitive with their listings on there, and they don't have a lot of control over that. They said that growth over the rest of the year might be flat, 2% to flat. So I thought that was interesting because you're like, ooh, now I'm not saying you know, if you want an Airbnb, you're going to go get it, but you're getting it cheaper now, and Airbnb can't necessarily control that part of it, or they haven't figured it out yet, it seems. Robinhood, I'm not really interested in tracking them, but crypto revenues, meaning the trading of you on your, you know, boop, boop, back and forth with your different crypto coins, now makes up 20% of their total revenue. So keep that in mind. If you're thinking about investing in Robinhood, you are now becoming more and more and more correlated, not to the price of Bitcoin and the others, but the volatility of others. So if Bitcoin goes quiet and just trends real slow and steady, well, that means that the revenues that Robinhood might make would be lower, right? Because people aren't trading as much. But if Bitcoin is whipping around back and forth, people are scared, they're excited, they see opportunity, they want to run for the hills, right? Buy, sell, buy, sell. Well, that generates more revenue for them. So it's just like we used to do with the brokerage firms back in the day. The market was more volatile. You go, that stock's going to do well. They earned a $7 commission over and over again. So anyways, side topic there. If you have any questions, I'd be happy to answer them for you. Otherwise, going into Friday tomorrow, there is no earnings that you want to pay attention to. Some Russell 2000 names. Wait, there's only 4 names reporting. Fridays, remember, are always quieter earnings-wise. Plus, we're on the backside of the earnings curve there, so less names reporting. Yep. Boy, what's the guess on the inflation report? Unfortunately, we already know what could happen there. If the month-over-month inflation number is not flat or 0.1%, then the inflation headline number is going to go up. We're at that point where the math, the way it's calculated using that average, you either need 0.0% growth month over month or 0.1% in order to get inflation not to go up a little bit. So you don't have to guess anymore. Yeah. Kirk says they're already saying inflation's not going down. Well, they said they're confident that the path that they're on to bring it down should be held, meaning keep rates where they're at, essentially. It's a fancy way of saying that. Yep. Would you be interested to see you break down the overall results of market earnings to this point? Oh, I'd be interested to see me do that. Yeah. Would you be interested to see me do that? That's actually something I wouldn't have to generate either. Goldman Sachs does that on a daily basis, and they're okay with me using their stuff. So we could include that. You say, man, Lyft, tell you what, that Lyft, it's about to go to up 100%. He's calling this a mid-30s stock here, Lyft. What's your target, man? I think they would like to hear that. Opinion on Uber earnings dips getting. Well, Uber says they say they're going to be profitable here. You know, so that would certainly help. I do like a pullback. So, John, Tom, I'm a sucker for that pullback there. We're done with everything. Got an earnings decline there. Ooh. Yeah. Dustin, with utilities at new highs, should that be considered folks are bearish, a precursor to a recession? Oh, with utilities at new highs, would you think that means people are being thinking more of recession? Higher dividend stocks. Let me wait. Hold on. Besides real estate, which has come around a little bit. So the higher dividend paying stocks have been getting more attention. So you can track the volume by the sector or industry of the stock. So in other words, I don't care where the stock went. I want to track the volume going in. Well, when you track that, you go, hey, look, people are looking for more of these consumer staples, these utilities, and at the bottom, the real estate. So is there a shift there? We don't have to guess. You can actually see it. Johan says, Dustin, when you buying a Model 3? I'm sadly not buying a Model 3. Right. You want to buy a Model 3 over there? No, Cody's good too. Yeah. Didn't look at Builder's earnings. Sorry about that. Opinion on Hershey's cocoa price going down and a nice uptrend since earnings. And I'm trying to jog my memory. What did they say? We covered it on that earnings day. I can't remember. There was something. I shared something about that. Yeah, maybe it was a while ago. They all blend together these days. I can't remember. I'm sorry. It is a tough one to get excited about, but whatever it was decent news there. So, oops. You may be assuming you're moving out of this range here. Right? I personally wouldn't chase until I saw that. Yeah. John Joe in St. Pete. Where you at in St. Pete? Give me a street. We're right down the road from you, John. Is it risky to simply invest in the Magnificent Seven? Well, all right. As an advisor, I'm supposed to say that might not be diverse enough relative to how much money you have. Can you do it? Yeah, you could do anything you want with your money. I don't buy the argument of saying I'm supposed to say this because this person's 45 and they have $300,000. No, what is it? What do you want to do? Let's measure that. Then understand, hey, it's going to be more volatile. You all right with that? Cool, me too, right? So is it risky to simply invest in Magnificent Seven? I think at this point, the risk to reward is probably not there for you. But no, you do your thing. 4th Street by Gandhi? Damn, John. I used to have an office on, it was 1st Avenue North and 5th Street. We were right downtown, man. Yeah. Okay, I could talk about that all day. Let's wrap it up here. I'm going to get out of the way. You enjoy the rest of your evening. Tonight, Wine and Wealth, by the way, with Eric, doing an overview of the platform, some updates to the platform, and maybe some other goodness in there as well. So be sure to check that out with him tonight at 8 o'clock Eastern. It'll be live in the portal. Adios.
When you wish upon a star, makes no difference who you are.